Hey, what's going on, guys? Welcome back to another video. Welcome back to the second video in this three-part series where I share with you how to invest in the stock market for beginners. Now, in today's video, we're going to take a look at specifically how to find stocks to invest in. I'm going to touch on a bunch of different other things in today's video, but that's going to be like the core of what we're going to talk about today. Now, if you happen to miss the first video I did, take a look at any of these topics here. If any of these sound interesting to you or you happen to miss that video and you want to go back and watch that, I highly recommend doing that. Then you can come back to this one and check it out. So when it comes to research, guys, and how to find stocks, realize that it's different for everybody. Everybody's approach, everybody's research process, and how they attack this is going to be different depending on who you talk to. I'm just going to share with you what I've learned and how I've gone about doing this personally. It works for me. It may not work for you, but generally I think this is an approach that a lot of people use, so it should be applicable to what you're going to end up doing in your research process as well. So I hope you guys get a ton of value from this video. As always, I give you the layout so you guys know what I'm going to be talking about in today's video. Also, I'm going to include timestamps as well. If you'd like to skip around in today's video, you can, but if you are a complete beginner, I highly recommend you try to stick through the entire video just so you can get the most value out of it. I think it's going to be very, very valuable especially for you beginners out there. Okay, so the layout for today's video is going to look like this. We're going to talk about developing your strategy. You're going to have a strategy when it comes to finding stocks in the stock market, and that's really going to depend on your risk tolerance as well, which is another thing that we're going to touch on in today's video. Second, I want to talk about cash versus investments. How much cash should you have versus investments? That's a very common question that I get asked a lot. And lastly, I want to touch on how to actually find stocks to invest in, the research process that I personally use to actually find good companies to invest in, or figure out if these companies are, companies that I want to invest in or I don't want to invest in. That's very important to make that distinction. So again, if you have not watched that first video, be sure to go check out that first video, then come back to this one. I appreciate you taking the time to watch this video. If you have any friends or family that are interested in learning more about the stock market, make sure that you share this series with them. I'm doing my best to kind of be quick, share with you guys all the information I can, and cram them all in these three videos here so that this is the main guide that you need to get started. All right, there's a lot more that goes on with stock market investing beyond these three videos, but my hope is to make three quick videos that give you the basics and give you a little bit more confidence when it comes to entering into the stock market. So that's my goal here. Please let me know if you have any questions at all in the comments below. I'll be sure to respond to all the comments that I get. Thank you so much for watching, and let's get into it. Okay, so I want to start off by developing your strategy. This is very, very crucial that we do this before we start making investments, before we start actively buying stocks in our account. Now that you have a brokerage, you need the strategy. So basically, understand that individual stocks, like I talked about in the last video, is not the only way to invest in the stock market. It's the way that I'm going to be touching on these three videos specifically. But if you guys would like me to, I can make videos regarding options, regarding index funds, ETFs, all those other types of investments you can make in the stock market. Today, in this series, we're going to be specifically focused on looking into individual companies. The first question I want to ask you guys when it comes to developing your strategy is, are you high risk or are you low risk? What are your goals with investing in the stock market? That's one of the questions that I would ask you when, you're answering this question. If you are trying to get crazy returns, you're trying to outperform the market, you're trying to grow your money at a crazy rate, right? Well, generally, you're probably considered more high risk. You want to be more in the market. You're comfortable with taking more risk, to get higher returns. It's also important to know there's not a right or wrong answer here. It's really just whatever you want to do. Now, we're still going to be talking about individual stock picking here, but you can really make that high risk, or you can make it, relatively low risk as well. You don't have to go for those super speculative growth stocks that we're going to be talking about here in a minute. So understand just what your goals are. And if you guys don't know what your goals are, I personally would just say, think of your age. Okay, think of your age. For me, I'm 22 years old. My risk tolerance is naturally going to be a lot higher than maybe somebody that's going closer into retirement. Why? Because I have more time to take on more risk. Now, generally, stocks go up, right? Depending on what you pick and how much research you do and whatnot. But generally, the younger you are, the more I'm saying I'm more comfortable with you guys taking more risk. Now, calculated risk. I should have probably clarified that at the beginning. When I'm saying high risk, low risk, I'm talking about like calculated high risk. I'm not talking about you're all in on one stock or two stocks, right? I'm talking about generally maybe we're going to put more capital into more growth stocks or more speculative companies now than we would if we were closer to retirement. So we're still going to be keeping the long-term principles of investing. I'm not going to be telling you guys to do any day trades or swing trades or anything, kind of risky like that. But I definitely want you to think about, okay, what is my age? What is my risk tolerance? Am I more high risk, low risk? And that'll kind of help us develop and go further and understand, okay, this is going to be my strategy looking forward. Because now that we have a strategy of our risk tolerance, now we can start going to look at stocks that, go in line with our goals and our risk tolerance. So I hope that's making sense. Another question that I want you guys to ask is, which portfolio is this? Okay, when it comes to risk tolerance and strategy, I have a different strategy when it comes to my retirement account with Vanguard and my Roth IRA than I have in my Robinhood portfolio currently for my long-term investments. It's a much different strategy. In my retirement account with my Roth IRA, I hold mainly index funds that just track the overall market because I'm going to be having that account for 40 plus years or so, right? With my Robinhood account, my individual stock account, I'm enjoying the actively buying companies, actively researching companies and trying to outperform the market. It's fun to me personally, but it really depends on what account you're holding, in my opinion. I think that's definitely a question you should answer. So once most of these questions are answered, now we can go ahead and build what's called a stock portfolio, which is just a group of stocks that you decide to buy that you're going to be holding onto. Just think of the stock market portfolio as the group of stocks that you're going to be holding. So I'm going to keep this rather simple, guys. I'm going to go through a couple different stocks that you can choose from, a couple different stocks that you can buy. Realize there's many more different types of stock than this, but I'm going to give you, I think I have 5 examples on here, just real quickly, sharing with you some of the characteristics of each kind of stock so you have a general idea. If I go super in depth with all this information, this video is going to be 2 hours long, and I'm doing my best to make it nice and quick. So the first type of stock that I want to share with you guys is dividend stocks. Now, the main draw for people to invest in dividend stocks is the income that these stocks can generate. So by owning a stock that pays a dividend, you are entitled to payments from this company that can be either every quarter, which is probably the most common. You can also get paid every single month, twice a year, once a year. As long as you remain a shareholder and the company continues to pay dividends, then you will continue to get payments from this company. So companies that make profits, they can reward shareholders in the form of dividends. That's what's called dividends there. So understand that not every dividend, though, is sustainable. A lot of companies actually had to cut dividends in the pandemic that we are currently in and really got taken off, back in March. A lot of companies actually had to suspend their dividends. So, my big warning for dividend investors, if you're just like, hey, I want to generate income, I want to make money every single quarter, every single month from dividend stocks alone. Look at the payout ratio and understand, okay, is this dividend sustainable? Because a lot of people just look at the very, very high yield, and that does not mean it's a buy, in my personal opinion. This is for a whole other video, by the way, too. But I would highly recommend that you're not buying stocks just because of the high dividend yield. We'll get into more of that in another video, but very, very important to understand. Now, to find out if your stock that you're looking into actually pays a dividend, all you got to do, guys, is go to the company that you are looking into to see if they pay a dividend, and scroll down here a bit till you find the About section, and then you can check the dividend yield. Now, if the company does not pay a dividend, you will probably see something like this with a slash through it or 0, and that simply means the company does not currently pay a dividend. So very important to keep in mind there. I use Robinhood as this example to show with you guys, but it's pretty much this very similar process with other brokerages as well. Now, the next type of stock that I want to talk about with you guys here today are value stocks. Now, if I can quickly describe value stocks for you, think of it as just undervalued companies that you're looking for. You're looking for underpriced, undervalued companies that for whatever reason are at a steal of a price or a steal of a valuation, right? So I think back to March of 2020 when we saw literally like every stock, down 10, 15, 20%, right? A lot of those stocks, may not have been as severely affected as that stock price was sharing. And this can be done through a lot of fundamental analysis to look into the business and say, okay, is this stock, downtrending because of the business fundamentals, or is it just the market sell-off and the panic that's driving this stock? I've made a lot of money and got a lot of gains in my accounts because I decided to start buying individual companies that were not, falling in price based on fundamentals, but were falling in price based on overreactions. And, in my opinion, it was just a great time to get into some of these stocks that I own. So fundamental analysis is the main reason that we find, undervalued stocks. And that's something I can also talk about in another video. So value stocks, just pretty much think of, you're trying to find undervalued companies at a steal of a valuation. So next type of stock I want to talk about is growth stocks. Now, those of you guys that follow my channel know that I love growth stocks. And like I said, it's because of my age and because of my risk tolerance by still implementing long-term investing principles. growth stocks are what I really love to do, or love to invest in. So when it comes to growth stocks, we can expect earnings and revenues to increase dramatically over the next couple years, maybe over the next couple quarters, next couple years, 5, 10 years, whatever. We expect that growth stocks are going to increase in literally every aspect, drastically over these next couple years. With growth stocks, you're usually not going to find dividend stocks as well, because the business says, okay, hey, this is where we're at right now. We know that we have a lot of potential to grow and expand our business. Right now, we're reinvesting everything into our business to expand our business at a much more exponential rate, as opposed to actually paying shareholders currently. So it doesn't mean they're always not going to pay a dividend, but generally you're going to find that these companies actually reinvest back into their business to continue growing at a crazy rate. So growth stocks, pretty exciting. In my personal opinion, you're just, there's a lot of potential for a lot of gains if you pick the right growth stocks. Some of the stocks that I own that are growth stocks currently are Spotify, which I think is going to do very, very well over the long term. I also hold Tesla. You guys all know, the story with Tesla the past year. Crazy growth stock. And I also think of Virgin Galactic, another stock that I hold that I would say is probably as much of a growth stock as you're going to find in the stock market currently, depending on, when you guys are watching this video. But growth stocks, guys, really think of they're trying to increase, or they're, expected to really increase revenue, really expected to increase earnings and demand in the near future. And, those are just companies that I personally like to be involved in. Sometimes I struggle with profitability. It depends on, at what stage you are getting into growth stocks, but there's a lot to choose from them out there, and they can definitely be exciting. The last one I want to talk about here today are spec stocks. So similar to kind of like growth stocks, you're not really buying spec stocks based on fundamentals. Now, spec stocks pretty much stand for speculative investments. Now, when I think of speculative investments, I just think of more risky. Okay, these are not the biggest positions in my portfolio. I immediately think of, my position I just talked about, Virgin Galactic. Virgin Galactic is not by any means my biggest position in my portfolio. Why is that? It's because it's the spec stock, in my personal opinion, in my portfolio. Right? The stock right now is in its very, very early stages of growth. They have a lot to do, but I love what they are trying to do. I love the vision of the company, and I just want to be a part of it. So that way, based on those reasons, it is my spec play in my portfolio. Now, my spec plays that I've had in the past and I currently have right now are not a big position in my portfolio because of that, because they're somewhat speculative, right? I'm definitely not buying Virgin Galactic here as my example on fundamental analysis and financials. That's 100%, that's definitely not why I'm buying that stock. I'm buying the stock because I believe in 10, 15, 20 years, this stock is going to be, much more valuable than it currently is. Based on what they are currently doing right now. That's a company that had their IPO, I believe, like last year or something. Again, depending on when you watch this video, but just a company that I want to be a part of that I consider a spec play. And there's nothing wrong with having spec plays. I would just say maybe limit the amount of spec plays you have. You don't want to make it the biggest positions in your portfolio personally, just from personal experience. But that is basically what a spec stock is. And those are basically the four main things I could think of immediately, the main types of stocks that you can invest in off the top of my head there. Again, realizing there's many different options as well, but those are the ones that we're going to touch on in today's video. So moving on here to the different market sectors as well. So when it comes to buying spec stocks, growth stocks, dividend value stocks, there's different sectors of the market that you can buy into, right? So if we take a look at this list here, you can just Google market sectors and you can find this list. And there's many different types of stocks that you can buy, right? Now, I don't necessarily know what's best for you as far as you want to be all in tech, do you want to be all in financials? It really just depends on what you're looking for. A lot of people want to be diversified amongst a bunch of different sectors. It really just depends on what you're looking for, guys. And that goes back to our risk tolerance and the kind of portfolio that you want to build out. So keep that in mind. Now, let's move on to cash versus investments, a very, very important section in this video. Short answer for this, guys, I recommend 10 to 30% of your wealth in cash or cash equivalents. I got that directly from Jeremy from Financial Education, one of the guys that I've studied for many, many years. He always recommended that, and honestly, that has saved me so much money and got me so much more gains in the market that I could have ever had before. Because if I would have just started, investing like I did 3-4 years ago, and I said, okay, I have $1,000 to invest, I would have literally just put in that $1,000 to invest and then had no money left over to invest any more money or add to my positions. So, using an example of if you have $1,000 to invest, based on this 10 to 30%, of cash and cash equivalents of your wealth there, you would invest between, $700 to $900 of that $1,000. So that means we have 10 to 30% of our wealth in cash or cash equivalents. So that gives us the example or it gives us the opportunity to add to our positions if we want to lower our cost basis. But ultimately, guys, it means that we're not all in the market. We can sleep better at night, because if you're all in the market and you're looking at your stock portfolio every single day and you know, hoping that it's up and all this stuff, you're going to go crazy. You know what I mean? So, you know, that's generally what I recommend. Notice I didn't say, you know, keep $100 at all times, or, you know, keep $5,000. It really just depends on everybody's financial situation. And as a general principle, I've adopted the 10 to 30% of your wealth in cash or cash equivalents principle. And that's what's really, really helped me out, guys. I definitely recommend to keep that in there. So if you guys have more questions on that, drop them in the comments below. And we'll move on to how to find stocks to invest in. So, very exciting section of this video. So, when I first started, guys, I literally just researched companies that I was a consumer of. That's as simple as it was for me. I would, let's say I went to Walmart and I was like, hey, I wonder if Walmart is a public company, you know? And then I found out that while I'm searching that on my iPhone, I'm like, hey, I wonder if Apple is a public company, right? Just, you know, those are probably stupid examples, but you get the point, right? I'm using these products. I'm like, I wonder if this is a publicly traded company. I use these products all the time. I'm always here buying and selling stuff, right? So I wonder if they're publicly traded companies. And you can look at that on your brokerage. You can Google that as well. So from there, that's a good place where I think you should start. And then we can begin our actual research process. And one of the first things I like to do is, okay, what products does this company make? So if I use the Apple example again, I use Apple for every example because a lot of people know it, but what kind of products do they make? Okay, they make the MacBook that I'm, you know, about to publish this YouTube video on. They make the iPhone that I'm recording audio on. They make, you know, literally everything else around this house that I have is made by Apple. So they're a dominant company, and you start to look in all the different products, all the different services that they offer. Right? This is very, very basic introductory research that you can personally do. And then I go from there and I go, okay, what is the competition within this business? So if we use Apple again as an example, who is Apple's competitors? We can list a bunch of different Apple competitors, and we can see what kind of how much market share, you know, of competition is Apple dominating. Is Apple, you know, taking 50% market share of these products and this demand, or is it other companies as well? So we could take a look at that. I think taking a look at the competition is one of the very quick things that we can actually do to, you know, kind of further our research here and understand this is even a business that we are interested in. Because if they're the dominant player in their space and the competition isn't as dominant, you know, I like to invest in dominant companies that, you know, are obviously taking a lot of market share from other companies out there, because if my money's in a company, I want it to be a good company that's proven and you know, very successful. So keep in mind, looking at competition is absolutely huge. Now, just those lists right there, guys, researching companies you're a consumer of, you know, looking at the products they make, looking at the competition. I mean, that's very, very basic research that all of us can do from literally our smartphones and just Googling it, right? So those are some of the quick things that I do. Now, if we get more in depth here, we can look into like something like the PE ratio, okay? So the PE ratio is when you take the share price and divide it by the earnings per share. Now, this really helps us to come to the conclusion if a company is undervalued or overvalued. And these are one of the many things that we can take a look at, right? But I definitely recommend taking a look at the PE ratio. And this is another thing that I can make an entire video on as well. So next, I like to take a look at the market cap as well. Market capitalization is very, very important when you're looking into a business. This just basically tells us the market value of publicly traded companies and the outstanding shares. You know, you have a lot of companies that are, you know, the market caps are insane, right? Market cap on, I think, Apple is over $2 trillion currently. And then you got other companies that are in the billions of dollars and millions of dollars. And there's just different levels to how big a company is. And you can judge that mainly by like looking at the market cap. So, you know, realize I didn't even say look at the share price right now. And the reason I don't say look at the share price or the stock price is because that may not be a good indicator of where the business is currently at. A lot of people don't understand that. So another thing that I take a look at though is the 52-week low and high, the range there. Just because I like to get an idea of what the stock price has been doing over the past year, over the past 5 years. But there's so much more to investing in the stock market than just looking at the stock price. Because again, that might not be a good indicator of how the business is doing right now currently. You know, there's much more that goes into investing than just the stock price. So a lot of people forget about that part. So those are some of the quick things that I do when I do my initial research process when it comes to investing in stocks or looking to invest in stocks. Then from there, guys, if I am still interested in the business, then I do a little bit more of a deep dive into the actual company. So then from there, I take a look at the balance sheet. We're going to get into some of these financial documents here that are very, very, very important. So a balance sheet is a very important document, like we said. And when you're looking into companies, this is pretty much a must. You have to be doing this. So this will show you how much cash a company has. It will also show you how much assets this company has. And we can also look at how much liabilities this company has as well. So this document is extremely important, guys, when it comes to looking into the actual financials of the company. And honestly, it really just deserves its own video at the end of the day. Now, moving over to the income statement tells us what the revenue or income that a business has from its products that the company is generating. So looking at the income statement is important because we need to see what is the company bringing in, right? How much does it cost to bring in this kind of revenue? These are some of the important things that I would suggest looking into before making investment decisions. And also, again, like the balance sheet, this deserves its own video as well. So those are two quick documents that I can definitely do a separate video on as well, but just know those are very, very two important documents that I would highly suggest that you look at. Now I want to talk about earnings. So moving on to the earnings reports for companies. So generally every quarter companies will report earnings. There are 4 quarters in a year. You are going to see how the company did for the previous quarter. That's what they're going to be reporting. So some of these questions that you might consider looking at when you're looking at earnings reports is, did the company beat expectations, right? Sometimes companies don't beat expectations. Sometimes companies absolutely destroy expectations. And generally that really affects the stock price in the short term, right? When companies report earnings, there's generally a lot of volatility on that day. Some of it's an overreaction, some of it's legit. It really just depends. Sometimes companies will actually, beat earnings like crazy and the stock price will drop 10%. So, I definitely don't recommend playing earnings calls as far as buying or selling just based on earnings in the short term. But be aware that's generally a volatile time for a given stock. So, pretty much, guys, earnings is just an overview of the business and the operations, and they also share the guidance for the future. So there's many other things that businesses do when it comes to when they talk about earnings. So one of the first things that you can participate in when it comes to looking at a company's earnings is the conference calls. Now, conference calls are actually going to be where you're able to hear the management team. The management team will actually get on the phone, talk about a bunch of different things within the business, how they did for the quarter, some of the guidance that they expect. And also, it's a great opportunity for you guys to actually, hear the management team, listen to the management team, listen to the tone, figure out, are they excited about the future? Are they not excited about the future? Why or why not? And there's also a lot of questions that get asked to the management team as well, as far as, analysts come on and they ask a bunch of questions that may be important to you that I think, you should be able to listen to and write down. I have a whole notebook of just, different conference calls within the investments that I was looking into, and also holding of some notes that I took that I think are maybe a bit nerdy, but, super, super important. So moving on from that, you also get the 10Q. So 10Q is basically every year. It's very, very important to look at that. You're going to get 3 of those per year. That's just going to be the latest quarter, all the very important information that you're going to want to look into. Typically, these documents are pretty long, but I still recommend looking through that as well. 10K is going to be the annual reports of the company. This goes very, very in-depth, just gives a full year snapshot of the actual company. Very, very important. This is generally pretty long too. But you're going to get that as well. And those are very, very important documents to look at, as well as listen to the conference calls. So wrapping up here to other ways that we can do more research, I want to talk about how you can just literally look at the news around stocks. You can literally just look at articles talking about stocks. So if you're interested, let's say in Google stock, you type in Google stock, chances are many articles are written about Google stock, right? And you got to understand that depending on who writes these articles, it'll kind of sway which way they feel. There's some people that really, really love Google stock and really, really hate Google stock, and you have to be aware of kind of who's writing it, so you're not making decisions based on other articles. But for me personally, guys, if I'm looking into a stock or a stock that I'm holding, I still think it's very important to get multiple perspectives from a bunch of different people when it comes to, the stocks that I invest in, or potential investments that I have. That way I can just get a better overall understanding of the business and maybe some things that I missed when it comes to my own research. So I definitely recommend, if you're Googling, you're looking into Google, or you're looking into, let's say, Peloton stock, right, and you're interested more about that business and how other people think about it, just Google that, read through the articles, take some notes on what these people are saying. But again, I wouldn't make decisions solely based on these other articles that you're reading, because depending on who's writing them, they may be really, really strong in one way or another, and you just want to kind of remain neutral as far as when you're reading all this stuff and take in multiple different perspectives. I think that's very, very valuable and definitely something that you can do from your phone, from your laptop. Very, very easy. So where can you find all this information that we just went over? Conference calls, 10Qs, 10Ks, all of this information. So you can find this in the investor relations page of the company's website. So for example, if you want to search Apple, let's just search Apple Investor Relations, and then we can click on SEC filings up here. So this will take us to the page where we can search for the document that we want, the specific document that we want. So if we want to look at the company's most recent 10Q, for example, we just put in here quarterly filings, and then you'll be able to read through their latest quarterly report. Okay, so that's about as quick as I can explain everything in this video without making this video too long or talking way too fast. So understand that if you guys have any questions, please just feel free to comment below. If you want me to do a specific video on any specific topic that we went over here, maybe it's more into dividend stocks, maybe it's more into balance sheet or whatever, just let me know in the comments and I will be happy to make a video on this. Just understand these videos are meant to give you like a general idea of kind of the research process. So thank you guys so much for taking the time to watch this video. I'm sure this video is not short after I get done editing it, but I really appreciate you guys taking the time to watch. If you guys get any value, please consider hitting that subscribe button, or please consider hitting that like button as well, or you can do both. That would really help out my channel as well. So this is the second video of the series. I'm going to look to wrap up the series with the next video coming out in a couple days. In that next video, I'm going to really talk about how to protect yourself from a stock market crash, how to handle volatility. I also want to share with you, when do you know when to buy or sell stocks, and what do you do with the money that you end up making in the brokerage? Those are just some of the questions that I really want to aim in talking about on the next video. I have a bunch of other questions that I got from you guys that sent me messages on my Instagram. So I will go through and make sure that I answer as many questions as I can in the next video that I got from Instagram. So be on the lookout for that. Other than that, guys, thank you so much for taking time to watch this video. I look forward to wrapping up the series and answering hopefully a lot of the questions that you guys have when it comes to starting out to invest in the stock market. So thank you guys so much. I hope you have a great rest of your day, and I'll see you on the next one.